Hi there, good morning. You're watching Buy Now, Sell Now on ET Now. I am Snehi Shah. With me is Cheryl D'Souza, and this is a show where we'll be taking you through all your stock-related queries. Anything you want to ask our experts, we'll be bringing on our experts on the fundamental and technical side soon. But before we do that, Cheryl, let's take a look at the market, and we've seen quite a good recovery from the day's lowest point on the Nifty.
Absolutely, Snehi, and you know why that recovery has actually creeped into the market. Have you seen the shade of green that I'm wearing at this point?
It's only because of you, Cheryl.
Yes, absolutely. That's what I would like to take credit, though we don't have Kunal on the show today. But yes, while I was passing by today, that's the first thing that Kunal said, that the markets are not supporting the color that you're wearing. But then I told him, wait till 11 o'clock and you'll see the markets rebound. No prediction, I was just trying to boast myself. But as you can see, the markets are seeing good recovery from the day's lowest point right now towards the day's highest point. That's what the markets are indicating right now. And if you look at the stocks that have moved in the last 15 minutes or so, a sharp recovery in Hero MotoCorp, approximately 1.7% uptick in the last 15 minutes. HDFC AMC is the other counter that has seen a recovery in the last 15 minutes. Tata Consumer, Titan, Nestle, Ultratech, all of these counters have actually seen a recovery over the last 15 minutes or so. So that's also aiding the sentiment in the market. So it looks like the consumption pack is actually trying to make a comeback, because you have ITC also among the pack that has actually seen an up move in the last 15 minutes or so. So taking a final look and deeper look at the markets, yes, it is Hero MotoCorp, JSW Steel, Shriram Finance, Tata Motors that are the top gainers on the Nifty, while on the flip side you have Power Grid, Indus Bank, NTPC, Cipla, all of them actually declining in trade today, while the advanced decline ratio very much skewed in the favor of gainers as we speak. Nifty Bank, tad bit underperformance when you compare it to the benchmark indices, trading flat right now as we speak, while the broader markets are bucking the trend. If you look at the broader markets, take a look at what mid-cap and small-cap are doing at this point in time, and both of them are actually moving in tandem with the benchmark indices. You have the metal index, that's the top sectoral gainer, followed by auto, realty, all holding on to positive territory, while it is PSU Bank Index and IT and Pharma, basically most of your defensives that are taking a bit easy in trade today. So that's the way how the markets are looking like at this point in time, Snehi. But let's wait and watch, and let's see if we are able to hold on to the shade of green that we've just actually touched right now.
Okay, so that's the state on the market right now. Good recovery coming in for Nifty. Nifty Bank also seems to have for now tilted into the green. But let's kick-start with our queries segment. For now, we have Sharmila Joshi who's joining us on the show. We'll get Osho in a bit as well to get us a technical sense. But we have Sharmila Joshi joining us on the fundamentals. Viewers, before we delve into the queries today, here's a look. Take a look at the number on your screen. 865-797-4571 is where you can write to us. Remember, when you are writing to us, please mention your name. Please very clearly mention the name of your stock, the exact query you have with the stock, when did you buy the stock, what price, what quantity. Sharing all of these details will help our experts help you better. And if this is about a stock that you want to prospectively hold in your portfolio, please mention the stock and the time horizon that you wish to hold the stock for. Now, with that in place, let's begin addressing all the queries today, and Sharmila Joshi is joining us. Morning, Sharmila. Let's begin with the queries, and first query coming in from our viewer Yash, who's writing to us from Tanzania, and he's got 690 Hindalco shares at a price of 650, wants to hold for the long term. He's asking, he wants to still add more. Would that be a good idea, and what's your outlook when it comes to Hindalco?
The outlook is very good, and within the metal space, if you ask me, I think aluminium stocks are on a strong wicket. The only caveat here that I would like to add for the entire metal pack is that you must remember that while sort of domestic trends or demand, etc., could drive other sectors with metals, you do need to look at what is happening internationally and how metals as a whole are faring, say, on an LME, or what the view from China is, etc., which just complicates things a little more. Having said all that, I think, as I said, Hindalco is a stock that I like. I would not add further at this level. Would wait in terms of valuations. It is sort of fairly priced, so I would wait for a slight dip if I get, and then add there. But what I have, I would definitely continue to hold.
So that's the take coming in on the metal pack. Let's shift to a story then that my colleague Anurag Joshi is picking up, that the proposed sale of Siadri Hospitals, a group by Canadian Pension Fund, a manager that is OTPP, is progressing, and the due diligence is expected to start as early as in a week. Let me go across to Anurag to get more details. Anurag, what's the story all about?
Yeah, the due diligence for the proposed buyout of Siadri Hospitals. This is one of the major hospital chain in Maharashtra, and this is likely to start as early as in a week's time. Now, Siadri Hospitals currently is owned by the Canadian pension fund manager Ontario Teachers Pension Plan, and the valuation for the transaction is being pegged at around 5,500 to 6,000 crores. Now, the potential buyers were put a non-binding bid for the transactions. Those include Aster DM, EQT, IHH Group, and the Manipal Group. Manipal is owned by Temasek. Now, the deal will progress to the following round after the completion of a due diligence. So, the next stage is the due diligence will start within a week, which will go on for the next 45 to 60 days. And following that, the deal process progresses to the final rounds. OTPP currently they are owning 99% equity stake. There's a little bit of minority stake also, but the buyer who comes in to the transaction will buy the entire 100% of Siadri Hospitals. Now, Siadri is running 11 hospitals in Maharashtra. Most of them are in Pune. Currently. And if you look at the advisors on the deal is Jeffries and Alvarez and Marcel.
All right, thank you so much for that, Anurag, for getting us the details of the story of Siadri Hospitals and also stake sale that is in process for that one. But let's get back on to taking your stock-related queries. Sharmila is with us. Sharmila, let me come to you with the next query. The problem being that there are so many queries pouring in. Let me just track one for you. This one is coming in from Navendnu Sharma, who's writing to us from Patna, Bihar. He's saying that together with his family members have about 900 shares of Mahindra Holidays below the 340 rupees per share mark. He wants to know what's the long-term, short to long-term prospect of this one. His time horizon is flexible. It could be 3 months or for the matter of fact 3 years depending on the prospects of the stock. Hold or exit, and also he's saying fancy for the hospitality stocks hasn't yet really rubbed off on Mahindra Holidays stock. Actually, what he's saying is true, given the fact that if you have to compare Mahindra Holidays compared to the rise of the rest of the hospitality or tourism related stock has not been so startling, isn't it? So what should one do? Stay put with Mahindra Holidays given the fact that it's a part of a very formidable brand?
I think he's also understood, and you also pretty much hit the nail on the head, that the problem with this stock has been that while I could argue that the properties that Mahindra Holidays owns are really, really outstanding and they're very well managed, etc., etc. The business, because of the model that they have, is sort of it's quite capital intensive, because they would be continuously looking at properties that they could acquire, and their existing members who've been with them for a while would also be continuously looking for newer properties that they could travel to, etc. So, which is why, while we have the rest of the hotel space or the hospitality space, whatever you want to call it, doing really well in terms of the volume growth that we've seen and the revenue generated, etc., that has somehow not translated to the stock price of Mahindra Holidays. I think the highest I've seen the stock is around 500, which is not much really, given the fact that it has spent so much time in this sort of 300 range. So, that would be the only reason I think it might be a good idea to switch to a hotel stock, to just take advantage of the fact that we are in a sort of a boom where more and more people are traveling domestically. So, you could even look at an Indian hotel at this valuation. I think you could get returns from there. Having said all that, it's a good stock. So, if you want to continue to stay invested, I don't really see any danger in that. But, that's precisely the point, that this has not generated the kind of stock return that one would like to see, given that all the fundamentals are fairly strong.
Okay, so that's a take on Mahindra Holidays and the overall travel and tourism sector. But let's move on. And Sharmila, next query coming in from our viewer Bharatwaj, who's writing to us from Coimbatore. He holds 1,700 shares of Tata Steel at an average price of 114. He's asking if he can add at the current market price. He's looking to hold it for the next 3 to 5 years. Now, given the set of numbers that we've seen from Tata Steel, good numbers coming in, the stock has been surging for the last 2 days. Give us a sense of whether now would still be a good time to add, or should he wait a little bit more for the stock to consolidate slightly and then add more?
that is really speaking, since he's talking of a 3-year horizon, it doesn't really matter much. I think you can add at this level. I'm saying this purely based on the fact that this again is a good company. I am taking into fact that, what I said earlier about Hindalco, that you have to track global trends. But, since the investor has said he's got a 3-year horizon, there's absolutely, I don't see any problem in adding now. But having said that, again, as you said, that, we've seen the stock rally because of numbers. You can give it a couple of weeks, sort of quieten down from there and then take an entry. But to sort of sum it up, I think hold what you have and definitely you can add more.
All right, so that's the take coming in on Tata Steel. Let me take this one coming in from Rohit. He's a long-term investor, and you just spoke a short while ago about the hospitality space, Sharmila. He wants to know whether it's good time to enter IHCL right now for the longer term, and also best pharma stock to buy today.
All these best stocks to buy are always very difficult questions to answer. So let's talk of Indian hotels first. The query is about Indian hotels, right?
It's about Indian hotels in particular.
Yeah. So, as I was saying, even when we were talking about Mahindra holidays, I think my only problem with Indian hotels is that the valuations are a tad on the higher side. But again, I think given, the kind of the growth that we've seen in travel and the sort of domestic travel, the way it has taken off, and now that we sort of put this whole situation with Pakistan, sort of we are slowly getting out of that. We are in peak holiday season, etc. So I think that this is a very good stock within this space. Here again, I would think that if you could add now and then wait for it to sort of do a sort of a staggered buying, it would be better. But this is a great stock to have in your portfolio if you want to have some holding in the hotel space.
Okay,
coming to Pharma, I am not going to say that it is the best stock, but the stock that I do like at this level is Sun Pharma. Overall, I think that if you talk of the pharma space, I think it is sort of relatively protected when it comes to this tariff issue from as compared to some of the other sectors.
Okay, I believe we've snapped that connection. So what Sharmila last shared was that she likes IHCL. It was a buy rating coming in on IHCL. And before we snap that line, she was also saying that the pharma stock that she prefers at the moment is Sun Pharma. And we'll continue that query when we come back. But on that note, viewers, we'll slip into a very short break and reconnect with Sharmila on the other side. You stay tuned.
Back, you're watching Buy Now Sell Now on ET Now, show where we get your answers for all of your stock related queries. Remember, viewers, you can write to us on the WhatsApp number that's flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, as well as the in case you've already invested in the stock, mention the buy price, the quantity and the time horizon. In that way, our experts will be able to help you better. Talking about experts, now we have Osho Krishnan also joining us on the technicals, while we already had Sharmila Joshi taking all of your queries on fundamentals. Once again, good morning to both of you. And let me continue taking the stock-related queries that are pouring in. This one is coming in from Deep. He's writing to us from Dubai. He's holding Kotak Mahindra Bank, 400 shares at a price of around 2,090 rupees per share. He's been holding on to Kotak Mahindra Bank since the year 2021. He wants to know whether he should continue holding on to this one or look to exit. Let me take this query to you actually, Osho, given the fact that Kotak Mahindra Bank has not done much at least all these years. This year, or rather in the last 52 weeks, there has been a rebound that has creeped into Kotak Mahindra Bank. But the problem with this one is every time you sense a breakout coming in for Kotak Mahindra Bank, it has actually not done that. In fact, it's just paused or consolidated or moved a tad bit lower. Well, how should one actually gauge the stock price movement? What should Deep do? Stay put with this one or look to exit because it's not even close to his buy price yet?
Firstly, thank you for having me at the show. Well, yes, Kotak Bank, no doubt, they're having some kind of a strong consolidation, and this counter always hovers within a strong or tight range. But recently, the counter has seen some kind of positive movement from the zone of 1850 towards 2300 and is about to have a kind of a breakout on the longer duration time frame. But overall, again, for a short-term perspective, I'm expecting that the counter might see some kind of consolidation around the zone of 2000 to 2200. So this is the immediate range for the counter, and any breakout beyond the point of 2200 can provide a continued momentum in this counter. Comparatively, other private sector banks have a better ROI, but looking on the technical front, this counter is still having very positive technical structure, and one should stay intact with their investment in this counter from a longer term time horizon. I'm expecting that the time it breaches the zone of 2200, then we can see another 200 to 300 point of rally in the coming future.
Okay, so that's the take on Kotak Mahindra Bank. Let's move on from that. And in fact, let's also talk about another bank. Sharmila, this query is about Indus Bank. It's coming in from a viewer who is Tarun. He's writing to us. He initially invested 10 lakhs at 1057 rupees a share, invested further 5 lakh rupees into the stock at 702 rupees. He wants to hold for the long term. He's asking for your view. He can afford to hold for anywhere between 2 and 5 years. He's already invested 15 lakh rupees and his average is also anywhere between 702 and 1057. So I'm taking anywhere between 850 900 would be his average price. Tell us what's the take on Indus Bank since the stock is only at 771 right now. So what's your take on Indus Bank?
So the problem is that the take is really not on a valuation basis, but it is with all the issues that have happened with the bank. And over there, I think it would be very difficult to comment on how things will proceed for them going forward. Since the investor has already invested a considerable amount of money in the stock, perhaps his confidence is more that things will work out in favor of the bank going forward because there are still some unresolved issues that they're looking at. So the stock has corrected very steeply because of all their ongoing problems. But as I'm saying, I think like now the pain is in the price, and you just need to probably keep the faith for that the resolution to all the issues work in favor of the stock. So I think because I think the investment amount is so large, and the fact that the averaging has also happened at a much lower price, I think for the moment just stay the course and just keep your sort of ears open for what the news flow is, because that's really what's driving the stock price.
Right. Let me take this one from Raghavendra, who's writing to us from Bangalore, and he wants to know about GSFC, 1000 shares. His buy price about 235 rupees per share or so. He wants to know whether it's the right time to average or should he exit. He is in loss in this one. What's your view coming in on GSFC, Gujarat State Fertilizer?
See, overall, this counter has seen some kind of a breakout in the recent period, specifically in the last three trading sessions. There has been a kind of a consolidation breakout on the short-term perspective. But from a medium-term time frame, the counter has emerged above the 200-day exponential moving average, and there has been some kind of positive technical developments also. So, looking at the overall development that the counter has undergone in the recent period, I am expecting that the counter has the ability to test the zone of nearly 225 to 230. So one should stay intact with their position. Any levels around the zone of 225 to 230, again, they should need to review the counter whether to exit at those points or whether there can be a continuity on the higher end. But for now, stay intact with your investment with a stop loss of around 195, and on the higher end, 230 should be the target for short term.
The level to watch out for on the upside for GSFC. Osho, we'll stay with you because the next query is coming in from our viewer, Mr. Balan, who's writing to us for stocks. He's asked about Gail, Bandhan Bank, Karnataka Bank and REC. He's asking if all of these would make good buys for the next 1 year. So that's Gail, Bandhan Bank, Karnataka Bank and REC. How are they shaping up on the charts?
See, Gail and REC definitely are looking positive to me. Gail has recently seen some kind of correction, and from there onwards, the counter have seen a kind of a resurgence also. So there can be a possibility of, from a longer term duration, that the counter can see some kind of positive momentum in the coming period. REC fundamentally is a very good company, and I'm expecting that in the coming future, there is a possibility for this counter to regain some kind of a strength. Currently, it is hovering slightly lower below the short-term moving average, but I'm expecting that the zone of 380, 370 is a very strong support. So stay intact with this counter also. Now coming to Bandhan Bank, again, this counter in the recent period have seen some kind of resurgence, but it is at a very strong resistance zone. So this counter once should review once it breaches the zone of 180 to 190, then only it is advisable to buy Bandhan Bank. Till that time, it's better to stay sidelines from Bandhan Bank. Rest all the two counters are looking very positive, and one can stay invested or can invest from a medium to long term perspective.
All right, so that's the take coming in on some of the banks. Let's move on then, and let me take this next one coming in from Krish, and this is for you, Sharmila. He wants to know about Bharti Airtel. He's holding about 150 shares of Bharti Airtel at a price of 1,605 rupees per share. He wants to know what's the long-term outlook for this one. What's your take on Bharti Airtel, given the fact that this one managed to break out of range and only actually kept rising. One of the stronger players when you talk in the telecom sector, and the fact that now you have this entire strategy that look at domestic oriented counters and sectors. Bharti Airtel, I believe, also tops that rank there.
Absolutely, and I think that if you were to just talk of the sector, just looking at the kind of what all of us are really using our phones for, we are like really dependent on our phones more for data than for the data plans than anything else. We're using them less as phones and more for every other purpose, and that kind of growth I think is pretty strong and sustainable given our demographics and the environment, etc. Within that, as you rightly said, this is the sort of preferred play when it comes to telecom because of their strong balance sheet. Because you have to be able to have like a very good and solid ongoing capex plan, because this is one of those sectors where you will need to keep investing and upgrading your capabilities, like how we move slowly from 2G, 3G, 4G, 5G, etc. So that's the other point in their favor. And even if you look at the stock performance, it's like been really, really solid. So I think this is one of those stocks that you definitely should buy as an investment and hold.
So buy and continue holding is the call coming in on Bharti Airtel. Let's move on from that. And Osho Vignesh from Bangalore is writing to us, holds 130 shares of Motilal Oswal at a buy price of 700 rupees per share. He's asking if he should add more at the current price. Would it be good to hold for the next 1 to 2 year perspective? What's the take on Motilal Oswal? Buy price at 700 rupees.
Overall, this counter is looking very positive to me. There has been recent correction. This counter have gone under some recent correction, and from there onwards, there has been some consolidation, and again has started gaining strong traction. So, from a medium to long term perspective, yes, one should stay intact with their investment. I am expecting that this counter has a potential to retest the zone of 950 to 1000 in the short term duration. So, for short term duration, 1000 should be seen as the immediate target. But even after that, also this counter has a potential to reach higher from a longer term duration. And overall, looking at the performance of all the equity or market related companies, this counter looks very positive, and one should stay intact with their investment from either for short term or even for long term perspective.
So that's the take coming in on Motilal Oswal. Let me take this next query then, and this one is coming in from Gautam, who's writing to us from Mumbai. He has 1,500 shares of Tata Motors at a price of 506 rupees per share. He wants to know whether he should hold, sell or buy some more of Tata Motors. Let me come to you actually, Sharmila, to get your view on Tata Motors, because a lot what happened to this one was on back of fundamentals, on back of news flow, on the back of performance, the tariff talks, and what subsequently Tata Motors announced, and then they roll back on that as well. What's your take on Tata Motors? Do you think now is the right time to go ahead and invest or add some more in the portfolio and stay put with it?
I think so. I think that you could probably add at least partially at this level and continue to hold. This is a stock that I like. I think given their current portfolio, I think you only need to remember that now this stock could move for different reasons, because they have considerable exposure overseas as well as the domestic. At the current moment, it looks like both the stories are fairly strong, and that is reflecting in their numbers. So to my mind, this is a good stock if providing your investment horizon is reasonably long. So yes, I think that you could at least add partially of what you want to at this level.
Shamila, we'll stay with you because next query also slightly fundamental in nature. Our viewer, Mr. Parthiv, is writing to us from Kolkata. He's asking for your view on Bajaj Housing Finance first, and secondly, he's asking about your view in the entire housing finance space. Because if you talk about Bajaj Housing Finance, he says that we saw the IPO price at 75, listing at 120, all-time high of 180. Now it has corrected back. He's asking if the valuations are still justified for Bajaj Housing Finance, and also for LIC Housing, Aavas, Aadhar. He's asking, now that the income of the affluent Indian is rising, household demand will grow directly. Would that be the correct logic to gauge if this is a good time to buy housing finance stocks, and also particularly of your Bajaj Housing Finance?
So first, let's talk about Bajaj Housing Finance. I think the current levels are good, valuations are reasonable. So definitely either hold or you could add to what you have. Coming to the broader query on housing finance, I think he's pretty much sorted as far as the understanding goes. I think that what we need to realize is that the real estate sector is a very important sector from the Indian perspective, and within that space, I do like tier two, tier three better. The reason why I'm saying tier two, tier three better is also the fact that you need to be into stock, like you need to be invested in stocks which are more present in such regions, as well as that where the ticket size, when you look at their AUMs, their target audience and their target investors should be of a smaller ticket size, because that I think is where we are likely to see growth going ahead, precisely for the reasons that he has outlined. That if you have incomes going up and everybody wants to own a house, then the ticket size is going to be smaller if it's your first house or whatever that you're aspiring to. So those would be the stocks, kind of stocks which are positioned like that. So I think LIC Housing was in that list. Awas, I think these are the kind of plays that you would look at. And coming to Bajaj Housing, as I said, for me that's a hold.
This one is coming in from Radhakrishnan, writing to us from Bangalore on CDSL, 100 shares of CDSL. He wants to buy actually 100 shares of CDSL Osho. He wants to know what is the right time to go ahead and buy the stock, and also the right price to go ahead and buy CDSL. What's your take for this one, and also a target for 1 year?
See, overall, this counter has been into a strong consolidation. There has been no positive developments in the recent period for the counter. The only positive that can be seen on technical front that the stock is having a kind of a higher lows kind of a formation in the short term period. So I'm expecting that in the coming period, there is a high possibility for this counter to have a very strong resurgence from current levels. And I'm expecting that on the higher levels, there is first the resistance that one needs to take caution about is around 1400 1420 kind of a zone. Once it breaches the zone of 1420, then we can see a tremendous movement in this counter for a higher target of nearly 1700 in the short term period. So if someone wants to buy the counter, I will be advising to start accumulating in a staggered manner at current levels, and once it breaches the zone of 1450, then one should become aggressive in the counter in terms of accumulation for a target of nearly 1700 for short term perspective. And again, we need to review once the counter reaches the zone of 1700 for a higher target for a longer duration.
The calibrated strategy for CDSL. Let's move on. Sharmila, will come to you. Stock in question is Asian Paints. Now, Matthew, who's a senior citizen from Kochi, is writing to us. He's saying that he got 200 shares of Asian Paints at 2,550 rupees per share almost 5 years ago, thinking that it's a fundamentally strong company to hold for the long term. Given the situation that Asian Paints is seeing right now, there's been a setback on results. There's competition that's increasing in this space. He's asking if it is still worth holding Asian Paints for the time ahead, and if not, which would be the stock that you would prefer over Asian Paints at the moment?
So this is a very difficult question to answer, because I think the investor has outlined very nicely what are the issues facing Asian Paints. We've had since this was sort of the darling of investors, the stock. What happens is that when you have that kind of status, you get a valuation that is much higher than what the peers are getting. And then you have this news of competition and et cetera, which has seen a slow erosion in that sort of PE band that the stock used to trade in. So it doesn't take away from the fact that it is still a good company. It is just that now the valuation that you think that it will get or going forward, that has now sort of moderated and come down. So my advice really would be to hold the stock, because having said that, competition etc., what real dent do they make in the kind of market share that they have, as well as let's not forget that this is at the end of the day a sector which to my mind will sort of where the market itself will grow. So from that perspective, I think it might be better to hold Asian Paints rather than sell at this price. That said, I think I do like a Kansai Nerolac or a Berger Paints. In fact, they were always the stocks that I had recommended, which I used to recommend more than Asian Paints, only because of the valuation issue. So those would be some of the other stocks that you could look at.
All right, so that's the take coming in on the paint space. Let me come to you, Osho. This one is coming from Shiva, who's writing to us from Chennai. Wants to know about Muthoot Finance, 890 shares at a price of 2,172 rupees per share. Wants to know what targets can one expect when you talk about Muthoot Finance. No doubt the stock today is reacting to its numbers. The fact that the PAT has come below the street estimates. When you see the numbers overall, brokerages have said that it's been a strong quarter. But what's your take now? The stock is reacting to its numbers. You think it makes sense to go ahead and actually average is another thing, but what's the target you're seeing for the next 3 months?
Overall, the technical structure for Muthoot Finance is very positive. The counter has always taken support of 200 exponential moving average, and from there, it has seen a kind of a strong movement on the higher end. So today, obviously, the volatility, as you mentioned, is because of the earning numbers, but I am expecting that once there will be a kind of a consolidation or these things fizzle out, the performance of earning pressure fizzle out in this counter, then one can look for buying opportunity. Although the technical structure looks positive, but one should not be very much complacent with the overall technical structure. In the short term period, I'm expecting that the support is placed around the zone of 2000, which was the low which was seen in the month of April. So one should wait for the counter to have some kind of a momentum fizzling out near the zone of 2000, and from there onwards one can start accumulating or averaging out the counter. In the short term perspective, 2300 is the immediate target. Once it breaches the zone of 2300, then we can see a kind of a movement of nearly 200 in the next short to medium term perspective. So 2500 would be the overall target, followed by 2300 as a immediate target for the short term perspective.
Those are the next levels to watch out for Muthoot Finance. Sharmila, next query coming in from our viewer Anuradha, who's writing to us from Mumbai. She's looking for a fresh buy into textiles, electronics and pharma sectors, which seem to be better poised during the tariff war. She's asking if you could advise for a fresh buy on Gokuldas Exports and Granules. How are these two stocks looking? And any other small caps advised from these sectors she can afford to hold for 3 years.
So let's talk of Gokuldas Exports first. I think, like within the textile space, there could be a couple of stocks that which have been fancied. I think this sort of heads the list. From a valuation perspective, it's looking a little expensive. So my thought would be, even if you want to buy, just buy a small amount, make a start, and then see where it takes you. Ideally, try to buy it at a lower price. But having said that, this is a good stock. Coming to Granules, I'm not that positive because I think this story has sort of, in a sense, this was a better story within that COVID period because their drugs were more in demand there. Now it is sort of within a zone because that demand has sort of come down. It's a decent stock, but I don't think you'll see the kind of returns that you saw within that period. So if you are patient, yes, you could look to invest, but bear that in mind that those are not the returns. The kind of returns that you saw within that period, you're not going to get those returns now. But this is a good stock. You'll probably get a good 15-20% return here still from this price.
So that's the take coming in on Gokuldas as well as Granules. This one is coming in from Jay Krishnan from Kerala. He wants to know whether he can enter Bajaj Finance for the medium term and an entry price target as well as stop loss for this one. What's your take, Osho? Bajaj Finance.
See, the trading setup for this counter is quite positive, although there has been some kind of consolidation in the last 3 trading sessions. But overall, I'm expecting that the support lies around the zone of 8800 to 8850 kind of a zone for a short-term perspective. While on the higher end, the time it reaches the zone of 9150, we can see a strong movement in the counter. So one can look for buying opportunity only once it moves beyond 9100 or 9150, that is 100 points from here onwards, with a stop loss of 8800 for higher target of nearly 9650 followed by 9700.
As a take on Bajaj Finance. Sharmila, next query coming in from our viewer, Mr. Somshekhar, who's writing to us from Bangalore, wants a short-term view on 2 of his portfolio holdings. He's got Exide, he's got 210 shares at a price of 360, and BHEL, he's got 100 shares at a buy price of 280 rupees per share. He's asking if we should hold, sell, average. What should the strategy be going ahead for Exide and BHEL?
Is that for me?
Yes, Sharmila, that is for you.
Oh, I thought since it's a short-term view, you will take a technical view. Yes, so Exide is a stock that I do like. I do own also. But ever since you had the stock going up because it was a fancy, they thought that that whole electric vehicle battery and that the excitement over that is what sort of pushed the stock higher. I do think that is a story that will play out in favor of XI industries going ahead. But as I said again, I would moderate my return expectations from this level. BHEL is a stock that I'm more positive on given their order book, given the way they have sort of.
break नहीं लेंगे क्या?
So from that perspective, I think I like BHEL more. So yes, I think it's a hold for both.
All right, so that's the take coming in on BHEL. Let me take this next query then, and it's coming in from Swati, and I'll come back to you actually, Sharmila, because she wants to know about Jubilant Food, Railtel and IFL. Are these good counters to actually look at to buy for the longer term fundamentally?
All three, sort of slightly difficult in the sense. I think one is Jubilant Foods, the other is
Food, Railtel and IFL.
So Railtel probably within that sort of this I would be more positive on, given the fact that this is a sector that is showing good growth and the stock has corrected from the higher level. So this would be a stock that within the three I sort of like the best. Then we have IFL, right? IFL Finance, is it?
I mentioned IFL Finance, but I believe it's IFL Finance versus the securities.
Okay. So again, within this space, I think the valuations for IFL are looking a little expensive. So if you have it, hold it. But I wouldn't recommend a fresh buy at this price. And for Jubilant Foods, I think the story is slightly. I mean, while again the possibility of revenues going up, etc., and the way people are consuming, that story is good. But we are seeing a little bit of a, like the competition, margins, etc., taking a bit of a knock on the stock. So from that perspective, both for IFL and Jubilant Foods, my view is a little neutral, while for Airtel, it's a positive.
On that note, we'll slip into a very short break and be right back just on the other side, and we'll continue with Buy Now Sell Now.
If you like this video, then like, share and subscribe to ET Now.